All right, good evening, guys. Welcome to another trading clinic. Going to focus on the Fed tonight. Right, well, that was all very interesting, wasn't it? So, before I get started, let me read what I need to say. The risk warning. Remember that spread betting and CFD trading carry a high level of risk or capital resulting in losses of decision deposit. There might be suitable for investors, so please ensure you fully understand the risk involved. The information and comments provided here under no circumstances can offer to the to invest. Nothing is considered investment advice. The information provided, please be accurate that it's produced. Education only. Content of webinars posted on moderation@joe.com. Content is not constitute financial investment or tax advice. And trading.com does not have any liability for content during the session. So we're going to go over today live technical analysis, multiple time frame trading, fundamental analysis. That's why we're here tonight. Okay, that's my presentation over. Okay, so what we're going to expect from the markets today? Well, the market says non-event, but I'm not sat here for the fun of it, am I? So I think the market's going to move today. We saw with the last FOMC meeting, we actually moved more than the last non-farm payrolls. So to say that this is a non-event just means that people are talking about don't know what they're talking about, and that's why I'm a professional trader and they're not. What we're going to talk about really is what the market expects. Okay, so the market expects nothing. That's fine. That's great. We like that because we're here. Anything can be a surprise. We're not expecting anything to change in this meeting as to do with the rate itself, and there's actually no press conference. So all we're going to be focusing on is that key bit of translation. What's the Fed going to say about the economy? What's their tone on what the market's going to do? Now, they've already preempted this. They've already preempted it a number of times, saying that they know growth has been a little bit slower. We know we had that really poor non-farm payroll, and we know we've got some problems with, the inflationary side. But all in all, this has just all been attributed to the weather. So we don't really know what inflation should be anyway because we've kept interest rates artificially low. All we know that is everything, price-wise has gone above inflation for quite some time. And the only way we can control inflation that I know is with interest rates. So really, realistically, because we've kept interest rates so low, we don't really know what inflation should be anyway. So it's a bit of a pointless statement, really. All the Fed are going to be focusing on is not giving too much away. They've got to give themselves room to maneuver. We don't think anything's going to happen in April. So I think it's all going to be about June or September. I personally am going to punt for September. I think, the summer's going to come. We're going to see a bounce back in the non-farm payrolls. We're going to see a bounce back in that awful, awful GDP that we saw today. 1.1 expected, 0.2 was a headline. That's the reason for why we've seen the sell-off in the DAX, the sell-off in the dollar yen, and not really seeing much strength in gold. That was a bit of a disappointment for me. I thought gold had made some inroads back up to 12.20, but we just didn't see that. Continued strength in the euro versus the dollar on the back of that poor GDP, and likewise in cable. So realistically, yes, we're not expecting much from the Fed today. We never are. But it doesn't really matter. I'm not interested what experts say because, experts have to put something down, don't they? I'm here with my large account. I'm going to trade today, and I don't care what happens. The markets have sold off massively. So if I hear anything dovish, I'm going to buy some low stocks. I'm going to stay away from gold tonight because I just don't fancy it unless I see a big overextended move. And if I see any kind of big levels hit in the dollar Japanese yen, then 1, 2, 3, 4, 5, 6 candles. Yeah, I'll be having some of that. The reason why I was selling it this morning, I didn't hold on for the figure because I never do. But I'll show you why. Well, this is why you technical trade. The difference between technical trading and fundamental. Here's some technical trading. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 15-minute green candles. Look back in the chart as far as you like. You ain't going to find that. Okay, so when I started to hit these upper levels, I decided to short the market around where I knew we were going to find some good resistance. Held on, got about here. After the figure, obviously the market went down to here. But it didn't matter. I'd made all my money here. I trade large size for short amounts of time, and large size means large money. So I'm not looking for 100 tick moves. So from averaged in, from round about here to here, 10 full ticks, got out here to make 10 full ticks on the downside. Thanks very much. Okay, so that is technical trading. Look for things that just scream out at you. How far can it go? It can't go up forever, that's for sure. When it does come down, it's going to be more aggressive. The figure helped, but again, it's technical trading. So what we see here, when we look on the hourly chart, is 1, 2, 3, 4, 5, 6. Down candles. So we hit levels like this, 118,508, levels like this, 118,328. We're going to see some bounce back at some point, don't we? Okay, so that's just technical trading. As I've said, it's an often misconception people talk about when they talk about intraday trading. It's not about being right on direction. It's being right at the right time. So you need to be involved in the market for a short period of time with limited risk and take your money out. I'm not trying to make 100 ticks. Okay, I'm just trying to make a monetary amount. If I make £500 a trade, £1,000 a trade, £2,000 a trade, I'm happy with that. I don't need to be making much more than that, to be honest. But that's the way I look at it. So I know what size, what margin I need to run, and what I need to do to make that a reality for me. Okay, so really, what we're going to see tonight is some sort of reaction, okay? We're expecting no descendants, so nobody from the FOMC to call for anything but, rates to be on hold. Lacker's a bit outspoken. He's the only one gunning for a hike. And to be honest, it's coming. Janet Yellen switched a forward guidance around a number of times. I said the UK is going to be first to move on interest rates. I hold my hands up. I was wrong, but new interest rates are going to move this year at some point. And I would be absolutely amazed if the Fed don't move this year after everything they've said. So, again, no matter what we interpret this as, this statement, this opening gambit that Yellen makes, or what other markets release to us, we have to understand the market's going to move irregardless. Okay, they're going to move because they always do. We're massively oversold in the DAX. We've come down more in one day than in the last 2 weeks. So we're going to see some sort of reaction. So what we're going to do is trade purely technically. Not too interested in what comes out because they can't leave anything out now. All the kind of, statements they've made previously about the growth, it's all been attributed to the weather for me. So the bad non-farm payroll was purposely released over a bank holiday. They knew it was going to be bad. The markets didn't take it that bad. The markets quickly recovered the day after. So realistically, the week after. Realistically, what we're looking for is something of key to be taken on by the markets, by the statement. And again, as we're so low in the indices, any kind of slightly dovish news is going to send the S&P back up. And as we can see, it's already going bid right now. So we're going to trade very, very technically, just off big levels. I'm not going to say too much about what is said unless I hear something key over the wires. But basically, we're going to look out for the movement, see where value is, see where we're overbought, oversold, and get involved. We're not looking for big moves here, okay? I'm not looking for 30, 40, 50, 100 tick winners. I'm just looking to get in the markets for value, get in and get out. And maybe we'll look to focus on the dollar yen because we've seen a lot of down movement. We've got absolute, good continuation style patterns, with that 6 hourly candles, all good reversals, DAX, SMI, all towards lows. So it doesn't really matter what's said by Yellen today. She's been very, very guarded how she's released things to the market. The Fed, Bank of England, ECB never come out and say anything directly. So all we're trying to do is glean any bit of overly hawkish or dovish compared to what the market sentiment is. That's all we're trying to do. Okay, so we're trying to get involved with some levels, these green and red levels, how I work, higher time frames, Fibonacci. Okay, see what the market does, and then try and get in and try and get out for some profit. That's all we're trying to do today. Does this mean that GBP is going down? Well, the trend is down. If you look at the monthly chart, it's going down. Okay, so we've recovered here, but again, any more that we're going to get quicker rate hikes than April, June, September, whatever, then we're going to see more demand for the dollar against the pound, so the pound should continue to go off. Okay, so monthly we've already kind of started to consolidate. Okay, so we've got 3 minutes before the figure now. So again, the idea is just to try and see any big quick movements. I've got a number of screens open, so I will share them in different respects. But I'm going to hopefully just I'm trading my big account today, not particularly massive size, but again, I want to make sure that I've given myself every opportunity to use all the kind of levels, the margin, everything else I need. So realistically, what we're looking for now is just that movement after the market gets this statement. So the statement, as expected, remove the word patience. Really, it's anything that's said. Goldman Sachs expects, if they say anything, they're saying it for a reason. No real change to the growth. Everything's really been put down to the weather. And I know we saw that terrible non-farm payrolls over the bank holiday, but I don't really think that's going to be taken seriously. The market's rebounded, fully after that. So again, we're still, even though we're sold off today massively in the European stocks, we're still in a massive bull trend. Okay, so watch out for gold. Okay, if the market is going to bounce back up, that could continue down. And watch for any bounces in the dollar yen and any rebounds in that euro dollar. The euro dollar looks pretty high to me, but again, I'm always been negative the euro. I don't think anything good coming out of Greece, and I've said that for a long time. Again, looking for the third bailout. So for me, realistically, they're just playing a massive game of chicken. And Varoufakis is an absolute idiot. Simple statements, okay? So I'm not here to be right, guys. I'm here to make money. That's what I do, okay? The only person I know that trades the amount of money I do live on FX Street. So just going to get involved. We see some good opportunities. We're going to get in and out and try and protect our capital and make some profit. All right, guys, just over a minute now before we get this release to the market. I'm going to talk very quickly. I'm going to shout out anything I hear of interest. If I don't, I'm just going to call like technical levels, tell you where to buy, where to sell, from my opinion. Don't follow me because, it's not that kind of session. It's education only. But this is real money, live, real-time events. That's what it's all about, guys. Right, get ready. So we're expecting the call unchanged. We know that. Okay, so it's moderate growth. Moderate growth. Okay, so watch for that S&P. Watch for gold. Fed federal target is left unchanged. Okay, so slightly better news than expected. Okay, so we're seeing that. Look at that rebound in the dollar now. Okay, so watch gold coming down. S&P selling off, should be perhaps going up. So watch the S&P for a good place to bounce down 2101 spot 38, maybe below. Gold's coming down. Gold's coming down. Watch for gold. Big buy on gold here at 11940. If it gets down there, okay, watch that. Wow, look at that rebound in the dollar Japanese yen. I said to watch that. We're massively oversold. Huge spike now. Huge spike in the dollar yen off the back of that better than expected news. Okay, so this is why we listen to the market. It's all better than expected. Okay, so watch getting back to these big levels in the dollar Japanese yen. Okay, so I think if we get back to 119 spot 208 could be a sell. So watch that level up there. Again, big rebound. Gold's coming down. We're buy back in the S&P perhaps. Again, look at them low levels of it. This all seems to be more positive from the Fed, better than expected, okay? So watch that euro dollar coming down off the back of them highs. We've seen the big spike back up on the dollar yen, okay? So gold, if it continues to go down, no real big levels until we hit that 1190 spot 4, okay? So no real movement in the FTSE, no real movement in the DAX. No move in the SMI, really. We're seeing the upward move continuing in the Japanese yen. Okay, so again, look for any of these key levels to be hit. Again, we've come up very high. We're tracing a lot of that 6 hours of downward movement. So we need to hit a good level before I can think about selling. Watch gold. We could see some big pile down to that 1197 spot 5 level and below. Okay, so we're coming down, which is not how I would expect from the S&P. So let the S&P sell off as much as you want. If we get down to these lower levels, we'll be buying down here. Okay, so again, little movement in the SMI, European markets, FTSE or DAX. S&P is taking this news badly. Gold towards the lows. But again, we've seen that big spike already in the dollar Japanese yen. Okay, so generally across the board, reconfirming that they knew the data was going to be bad. So, again, a fairly soft approach from the Feds. That might mean that we're looking more for a September rate hike. So again, let's just let the market settle down a little bit. Okay, so I'm just going to do a quick fib on the 5 minutes. Just to see where we've got some level. Because again, I told you to keep an eye on that dollar Japanese yen. It was absolutely primed. 16 candles up on the 15 minutes, 6 hourly candles down, and then we've just done a big spike to get all the short-term traders out. So wow, big move in the dollar yen. So this is why it's not a non-event. Okay, it's not a non-event. S&P recovering now. Okay, so watch the S&P. Well, look for the DAX to gain some traction. The FTSE again, gold's already come down. It should be coming back off, but it's not. It's just not completely following. So if we see the S&P gain, then again, maybe some good idea to buy some, buy some DAX and see if the market's going to take that market well, because we're massively oversold in the DAX. Much more than the SMI and the FTSE, I would say. Gold really just winging around back to just before where we were trading beforehand. So difficult now. Again, look at that big retracement we've seen in the dollar Japanese yen. But I've let this first 5 minute candle print on the charts, because we're just going to get top and tailed if we get involved now. I'd say, again, I still see a little bit of value buying some DAX, but not until that 5 minute candle's closed, because we've come all the way down in the 5 minute through the 50%, through the 38.2. So we're going to have to see when that first 5 minute candle closes on the Japanese dollar Japanese yen, because that's the one that's moving. That's the one that's winging the markets around right now. So again, whatever's been said by the the Fed, the market has taken it as very positive, dovish news. But again, this is just a lot of market interaction. Look at the euro dollar already down and back up. This is why it's so dangerous to trade these sessions. The liquidity is quite low, and the big volume traders are quite high. So you get these big moves, and you've got to wait for that secondary move to give you an idea of what the market's going to do. So we've got 1 minute before the 5 minute candle closes, and we're on the 38.2 on the dollar yen at 118 spot 808. So let's see how the market reacts around 118.858, because that might give us an idea if the market's going to continue up or continue back down when we see this first 5 minute candle printed on the dollar Japanese yen. So gold just really winging around. SMI and FTSE, all these have retraced their gains. So has the S&P. Gold down and is now back up. So again, probably going to close below the 23.6, depending on where the market closes this next 5 minute candle and reopens. So watch, we could see a big reversal back in this dollar Japanese yen. It could go and make some fresh lows now. You're very, very aggressive. So back below, open up at 118 spot 718. So what we're looking for is the low of 118664 to be broken. Okay, but we're not. We're heading back up to that 118 spot 858. Okay, that's going to be the 50% fib level in the dollar Japanese yen. So might be a quick sell of that. Nope, not quick enough. Whoa, the market moves in this are just so very volatile. We're probably a few ticks away from being on the actual 50% before it jumped back about another 30 ticks. So difficult to trade. So a lot of choppiness just coming from the squawk I listened to. Thanks for that, guys. Yeah, no surprises there. So again, seeing the UK got a little bit positive. Again, there's we're on the 161 spot 8 in the S&P, so we're looking towards 2113 spot 45 to get to gold. Retraced all them downside moves, and it's still towards the highs. So difficult, guys. Difficult to see where the value is here. Difficult to see where we'd like to buy and sell. Anything you get involved in, you're looking for a 10-second trade. I mean, it's very, very difficult to get any kind of real direction. I think if you're going to look for some direction, I'd probably get in the DAX and hold long, but I'd only do it small size because it's very, very difficult to see where the market's going to end up today after that big selling action. S&P's again looking for these highs, so look for a break of 2110 spot 37, and then again the big pivot point will be 2113 spot 45. So that could drag the rest of the major European indices up. FTSE's getting a bit of traction now. FTSE's getting involved. So next level upwards in the FTSE is 7003 spot 04. But again, as soon as the market looks like it's going to break up, it dips back down. So it's very difficult to think where the value is in the European indices. We're thinking, micro terms in trading, and when we're paying the spread, we're looking for a 10, 15 tick winner really, and that's hard to see how long we're going to have to hold a trade to get, a 15 tick straight line move. So still positive in the dollar Japanese yen. We still haven't hit that 118 spot 858. We might do now. Let's see what the market does in that level. Okay, a few ticks away. Sold off instantly when it tried to get up to that level before. So we're just hovering around that now, that 50% mark. So we're either going to see a break and it's going to continue higher, or we'd see a sharp pullback as we saw before. Again, no real particular bias either way for me. It's difficult, isn't it? It's difficult to say. The markets, the movements are just so volatile. So the euro's coming down a little bit now. Down to these lower levels. Got some great targets, 1 spot 10971, 1 spot 10399. But we're pretty much trading pre to where the FOMC came out. So we just saw, a big spike, up in markets, then down. So gold again, doing what it should do, should start to come down now. As I said, if we start breaking these lower levels, down through 1198, this is a big level down here at 1190 spot 4. So if the indices do continue to go up, you would see that bullish momentum continues. So we've just hit that 50% level. So we're just above it now, that 11858 in the Japanese yen. So we haven't really squeezed through it yet. So difficult, isn't it? Difficult to know if that's a good selling point. Maybe we'll let it get to the 61.8 before we decide. Okay, so the 61.8% is coming. Okay, so I'm selling just selling a little bit of size here on the, so it broke through it already. Okay, so already printed, above that 61.8. So not get too worried. We're not going to do big, huge size. The market's just too volatile for these things, but we're aiming for a new high or to get back down to that 11858 level fairly quickly. Okay, so it's coming back down now, coming back down. So again, got 1 minute before this closes. So we've seen 3 5-minute green candles. So we're either going to make a new high, we're going to come back down. Okay, so in profit now. So do with that next candle closing just below where we're trading now at 1189 spot 900 when the next 5 minute candle opens. Okay, so we're closed on it now. We're closed on that level. So a quick red trace down. We're going to get out maybe at 11858. Just see that quick snap back into the inner Bollinger Bands on the 5 minutes. As I say, if it starts to go up towards them new highs, then we will get out. Again, we're not trading large size here. Gold still holding towards the lows. S&P really just ranging in between. European equities looking a little bit, of a bounce, a little bit bullish from there, but nothing major, to be honest. So just a few more ticks down for this dollar Japanese yen. Just see how it reacts on that 118.858 level, which is the 50%. Okay. Out for profit. There we go, guys. As simple as that. There we go. I told you what was going to happen. Waited for 1 minute, made 50 ticks. Well, I mean, I guess if you average it up to what trade size I was trading. So it comes back down now. You're looking for the 38.2. Sorry, I just put the chart on I was looking off. So looking at the 5 minute. So obviously did the spike of the first 5 minute candle. 50% here. 118.858 level I was calling out. Waiting for the market to close here, open the next 5 minute candle on the 61.8. We just took our profit really when we just dipped back down there. So 4.8 ticks on a 5 lot, 25 ticks. Not going to change the world, but that's money, isn't it? That's money. There we go. So, again, I mean, this is what we're trying to look for. I mean, again, I've told you, the 15-minute candles, massively up. Too much buying here, too much overselling here. So we're looking for that spike back. We saw the spike back. If you're going to take a punt, you could have done. But I'm not here to take a punt. I'm here to trade fundamental news technically, okay? So that is the way I do it. Again, we're out now. So profit was right to be taken here. But that is a short-term trade. Generally, I'm clipping 15, 30, 50, 100 pounds a tick. Okay, I'm not prepared to do it over this FOMC today. Just I made a lot of money today. I don't want to give it back. So again, I was only trading 5 lots, made 25 ticks. Okay. That's enough for a meal out. It's not going to change the world, is it? But there we go. That's somebody making real money, real time, telling you how it's done. There's no smoke and mirrors here. This is my own account trading live. Okay, so that's the one screen I've got, and the other one I've got obviously is the main markets here. S&P is now reversing, so again, look for these low levels at 2092 spot 15. Gold still towards the lows. No real bounce back yet in the indices. I think we're going to open up negative tomorrow, and maybe that's all on the back of the GDP that we expected at 1.1 came at 0.2. Even if the weather related, that's a terrible figure. Okay, very, very difficult to trade these guys. And you see a lot of computer trading, a lot of technical trading, and that's why you can't be in. That's why I was in that trade for a minute. Because, if you give if you try and make too much money, you try and, get too much out of this, then, you're going to fall foul. And especially if you're trading any kind of size, it's far too dangerous trading size over these FOMC minutes. And that's why you see me cut my size down, again, to a very small amount. So what we've done is we've found support now in that 5 minute chart on the, I'll just show you back on here. So what we're looking for, according to Fibonacci, if we close above the 50%, then we should make a new high. Only by 1 tick, maybe. So your next point of attraction could be up here, back to 119 spot 117. But as I said, it's too wingy now. I've made a little bit of money. I've proved my point by trading fundamental news technically. The next kind of point of attraction for me would be the euro now seeing some breaks down to 1 spot 10399. Gold, again, it might get absolutely hammered. If it gets down to this level here at 119, spot 14 in any kind of hurry, I'd be buying that back because, again, there'll be some room for buyers here. Should really see if gold's coming off, the euro's coming off, that we should see, that bounce back in the indices. The S&P doesn't seem to want to go up, but you have seen the back of that really bad, GDP, which seems to be dragging through the market. So, again, if you look at the hourly chart here, go back to the dailies. So trying to figure out what's happened. Well, we've come down so far, 525 ticks. Okay, so in the last kind of real back down day. We only came down 800 ticks. So we've come down 500 ticks in one day. And we've got these really levels down here at 11011 spot 80. So really, I'm not going to start buying it till I bounce. I mean, I'm like everybody else. I've been selling the tops of the DAX, for years and getting killed. So maybe the DAX is just going to sell off now. We're all going to miss it. We're all just going to keep buying bounce at the bottom. But that's the way trading goes, I'm afraid, guys. It's not easy. So you're looking for them longer-term trends and to be right, you're an investor, okay? If you're trying to be right in intraday movements, you're just, a trader. You're looking for them intraday moves, 20, 30 ticks. Don't try and be right in trading, okay? Just try and be right at the right time. It's too much of a luxury to be trying, be right in these situations and get them longer-term moves. All right, guys. Yeah, sorry. As I said, I'm not going to make any apologies. That's I talk quick. Because the markets move quick. 25 ticks in the markets, not to be sniffed at. Some people can trade for years, not like 25 ticks in the markets. Again, I'm not trying to, saying the best trade in the world. That's not why I'm here. I'm here to tell you how you trade fundamental data in a technical manner, how you have your framework, how you look for opportunities, and, get in, get out. So I'd say, if gold starts to really hit these lows here, and I'll show you the same kind of scenario of a daily, hourly, and 15-minute breakdown. So what you're looking for here, again, is them short-term candles to show you what can happen in the longer term. So big red candles. So we break this lower support here, then, the next support are these intraday pivots, and then here. But then your 15-minute, again, same scenario. A bit clearer. Yep, support, then nothing to that big daily level. And then on gold, well, we've got a small Fibonacci's and small levels I've got in play. So I would say, 1196 spot 19 could be a bounce point. That's the old 50% of a previous up move. But again, you've seen green day, so red to the low of this day is where the market's taking this very, very positively, which it seems to be doing in some respects for the dollar, not so much for the S&P, but anything positive with the S&P and the dollar, it tends to be negative for gold. So really, you could have loaded up gold and stayed short, but it was too volatile, wasn't it? So I'm not going to sell it now. I'm going to look to buy it back. And that's what you have to do. That's a difficult thing with trading, isn't it? You've got to pick the opportunities when they're there to be, there to be taken. So I'd say really 1196.9, I might start buying some gold around there. I don't think it would get down to 1190 spot 14 in the time I've got left in this session. So again, guys, the markets have taken that news positively. We're going to have to reinvestigate and, seeing exactly what was said. But generally, if the market's taking that positively, it means a rate hike is probably going to be a little bit further in the future. So maybe September, maybe, who knows, Q1 2016. Who knows? The Fed don't know, to be honest. Janet Yellen's not got a clue. She really hasn't got a clue. No one in the markets has got a clue. That's why these Fed meetings are so volatile and so kind of, aggressive, because you've got people making huge bets, and speculating. At the end of the day, interest rates have to go up at some point. Simple. That's just market reaction. It's just, the way markets function. We move in cycles. And, after the election, they'll move up in the UK. So simple. We haven't solved the world, have we? By low interest rates. We've solved the world by quantitative easing and pumping money into the banks. We haven't solved anything by low interest rates. All we've done is create another credit bubble. So, the fact that interest rates have to go up, some of that good work's going to be undone. But it's not all attributed to low interest rates, is it? So there we go, guys. A lot of movement. Very, very difficult to trade. Again, I identified the market to get involved in, and even though the market's going back up, the dollar, Japanese yen, I sold it and made my money. So it just goes to show, doesn't it? You can make your money in lots of different ways in the markets. And I'm not here to be right in these short-term trades. I'm here to be right at the right time and make some money. So I'll see a little bit of strength come back into the DAX and the FTSE. So again, a break of the FTSE at this level here. Could see the market try and get back above 7,000, 7,003.04. SMI, stay away. It's too difficult to trade. S&P, again, winging around from their lows, sitting back at the highs. And I would say gold is what we're going to be looking. Gold, if it gets down to 1196.19, could be a little buy. But again, we'll have to see how aggressive the market gets down to these levels and how quickly. Because, the speed for me, generally, it dictates what the kind of trade we're trying to do. If it, goes a little bit slower, we can average in. If it goes quickly, we've got to be in and out quickly. All right, guys. Any final questions? Any thoughts? As I said, a lot of things going on, a lot of things to be said, a lot of movement. And again, it's very, very difficult, guys, isn't it? Very, very difficult to trade these things longer term and to build any kind of longer term trades over what is, a very kind of quick piece of information. And it's, sometimes a non-event, but, other times it sets that tone. So what you're trying to do now is people thinking this will filter through into tomorrow's trading, and people are now trading after the aftermath and trading for tomorrow. So that's why you'll see the euro continue to weaken, because people were taking positions into tomorrow's session and holding them overnight. So again, people were buying low in the indices, selling high in the euro dollar, and that's why we're seeing strength come back into the dollar yen. Because people are going to look to trade this overnight now. So look for, again, the pound losing a bit of traction against the dollar. So we've got big levels down here at 1.5313. Again, indices, again, getting a little bit of traction towards the highs. So we see the S&P start to pop up and get to these upper levels at, 211.3 and above. Then, watch for gold to come down, because, gold, for me, has been in a very bullish trend. We saw them two insanely crazy days where gold just bought up 150 ticks in a candle for no reason. So again, if they are now fundamental trades that are now taken away from what the Fed has said, then people are going to be liquidating in large positions very, very quickly. So again, we could see that sell-off in gold continue. GBP against New Zealand dollar. Yeah, looks fairly bullish. Again, look for your 50%. Here's the down to the up move. Okay, so we're looking for that 50%. So I'd say market's got every opportunity to test 2.0117 and then continue back into the range. So your dailies, yeah, looking quite bullish. We're not back into the 50% of this range, I can tell you by looking at it. So yeah, above that, we're looking 2.01117, and then above that, the 61.8 at 2.03032. So yeah, looks fairly bullish for the pound against the New Zealand dollar. Not really interested in trading the New Zealand dollar or the Aussie dollar, to be honest. Holds no interest in me whatsoever. But yeah, I would say we're slightly bullish for the short term. So that's what I'd say. Anything else, guys? Anything else we'd like to ask before we wrap that up? So again, look for that continued weakness in the euro, I would say. I'm always negative the euro anyway, and after we've been on that rally for nothing, I don't see the rally was for. I think it was just some value buying. If we're going to be now more kind of, bullish the dollar and the Fed, and we'll have to, refigure out exactly what was said, but it all seems to be taken, fairly dovishly by the market. So that's why S&P should continue to go up, gold should go down, and then dollar should strengthen, so euro should come down, and the dollar Japanese yen should go up. Euro CAD. Okay. Well, it looks a little bit more negative to me. Again, everything against the euro for me is negative. There's the 50%, so you can see that's acting as support and resistance. So I'd expect the market to try and pop back up on any positivity back to 1.34500. But for me, it's going down. So I would say realistically, that looks a nice level. 1.28809. So yeah, I'd be selling any high in anything euro-based, to be honest. Lower high, lower high, lower high, lower high. So probably get a bit of profit taken up to here, market then come back down in the long term. So selling everything against the euro, because Greece is still, it's not fixed, okay? Greece will leave the euro still, okay? I've said it for 18 months. I'm just going to stick by it. So gold, a little bit of a rebound there off them lows, but no real levels we get excited about buying, to be honest. So again, you just be trading market movement. Nothing wrong with that, getting involved, but I can only really trade against the levels when I'm, trading the kind of normal size that I do, because otherwise I won't have the confidence to stay in trades. All right, guys. Well, anything else, guys? Get me on Twitter. Not surprised there's not more people here today. I didn't really see much advertisement around the event today. Again, live money made, only 25 ticks, but still live money. I don't see anybody else doing that. So again, look for these trends to continue. Continued weakness in the euro, strength in the dollar, and again, indices looking high now. So again, that 7003.04 would be a nice one in the FTSE. And if gold does start to really kind of tank overnight, it's going to get down to 1190.4. All right, guys. So yeah, it's as good as it says. Stay long the indices, stay short gold. But again, I won't be holding anything overnight, guys. It's too stressful, isn't it? Any thoughts for the Eurostoxx and the ES? I mean, the Eurostoxx, or do you mean the S&P? S&P is going to get S&P, until interest rates, go up, is going to continue these highs. So it's going to continue to go higher. It can't do anything else. The indices have got too much money invested in them. We're in a massive bull trend. So all the indices, until interest rates are confirmed as going up, are going to go up. Still think FTSE is going to get to 7.3 before summer and then crash towards the end of the year. And that's it. That's my only really prediction, to be honest. Final word in the euro dollar, sell it. Finished. Okay, you think Varoufakis, and you think the Greeks are going to come out of this completely intact with all that debt burden? Not a chance. Eurozone can't budge on haircuts because they have to do it for everybody else. So one way or another, the Greek people are going to vote with feet, and there's going to be no referendum, and they're going to leave the euro. It's as simple as that. There is no way out. And all this chicken, it would have been sorted by now, wouldn't it? Where's the money coming from? It isn't. But you want to buy below in the euro, guys? You knock yourselves out. It's entirely down to you. I'm not always right. I'm only right 99 times out of 100. Yes, talk fast. Yeah, I'm afraid when you trade the intraday markets on the futures, then you have to talk fast. There's no room for sitting back with a cup of coffee and analysing these things. You want to make some money and you want to make it quick, you've got to talk quick. All right, guys. Well, anything else, get me on Twitter at Steve Ruffley, or just Google me. I'm not hard to find. All right, guys. Well, we enjoyed it. Take it easy.